You need to hear this if you're a history buff. From dry goods to Wall Street, the Lehman Brothers journey is a fascinating tale of ambition, innovation, and resilience. The Lehman Brothers journey is a story that encapsulates the spirit of American capitalism. The story of Lehman Brothers is a classic tale of American capitalism. It's a story of ambition, innovation, and ultimately devastating failure. But before the fall, there was a rise that spanned over a century, marked by significant milestones and contributions to the financial world. It all began in 1850, far from the gleaming towers of Wall Street, in the small town of Montgomery, Alabama. This was a time when America was still finding its footing, and opportunities were ripe for those willing to take risks. Three German Jewish immigrant brothers, Henry, Emmanuel, and Meyer Lehman, arrived with dreams of a better life. They were part of a wave of immigrants who brought with them a strong work ethic and a desire to succeed in the new world. They opened a humble dry goods store, laying the foundation for what would become a financial empire. This store was more than just a business, it was a symbol of their determination and entrepreneurial spirit. The Lehman store thrived, catering to the needs of a growing nation. Their ability to understand the market and meet the demands of their customers set them apart from their competitors. They expanded their operations, trading cotton, a vital commodity in the pre-Civil War South. Cotton was the lifeblood of the Southern economy, and the Lehmans' involvement in this trade marked their first major foray into the world of finance. The brothers' sharp business acumen and unwavering work ethic propelled them forward. They were not just traders, they were visionaries who saw opportunities where others saw obstacles. They moved their headquarters to New York City in 1858, establishing a foothold in the nation's financial center. This move was a strategic decision that positioned them at the heart of American commerce. The firm's transition from commodities trading to investment banking began in the late 19th century. This shift allowed them to diversify their portfolio and tap into new revenue streams. Lehman Brothers played a pivotal role in financing the railroad boom, a testament to their ability to adapt and capitalize on emerging industries. The railroads were the arteries of America, and financing their expansion was a lucrative venture. They helped underwrite the initial public offerings of companies like Sears, Roebuck and Company, solidifying their reputation as financial pioneers. This was a significant achievement that showcased their expertise in the financial markets. This marked a turning point as Lehman Brothers began to shape the landscape of American finance. Their influence extended beyond Wall Street, impacting various sectors of the economy. Throughout the early 20th century, Lehman Brothers weathered economic storms and emerged stronger each time. Their resilience was a testament to their strategic planning and risk management skills. They navigated the Great Depression, demonstrating resilience and a knack for managing risk. This period tested their mettle, but they emerged with a renewed focus and determination. This period saw the firm's involvement in various sectors, including aviation and entertainment, showcasing their diversified approach to investment. They were not afraid to venture into new and emerging industries, always looking for the next big opportunity. By the mid-20th century, Lehman Brothers had cemented its place as a major player on Wall Street. Their journey from a small dry goods store in Alabama to a financial powerhouse in New York City is a remarkable story of vision, perseverance, and adaptability. Riding the bull Lehman's ascent in the late 20th century, this was a time of great optimism and opportunity, where the financial markets were booming and Wall Street was the epicenter of this economic surge. The latter half of the 20th century witnessed a period of unprecedented economic growth and globalization. Cities around the world were transforming, and the interconnectedness of global trade was becoming more apparent than ever before. Lehman Brothers, under the leadership of a new generation of executives, embraced this changing landscape with zeal. These leaders were visionaries, eager to capitalize on the burgeoning opportunities that the global market presented. They spearheaded mergers and acquisitions, facilitating the rise of corporate giants. These strategic moves not only expanded Lehman's influence but also reshaped the corporate world, creating behemoths that dominated their respective industries. Their expertise in underwriting securities, particularly bonds, fueled their expansion and influence. Bonds became a cornerstone of their business, providing a steady stream of revenue and solidifying their reputation as financial wizards. The firm's culture, however, underwent a significant shift. The once conservative and cautious approach gave way to a more aggressive and ambitious mindset. A focus on aggressive growth and profit maximization began to permeate its ranks. This new ethos was driven by the desire to stay ahead of the competition and deliver ever-increasing returns to shareholders. The days of conservative, partnership-driven decision-making were fading. The old guard, with their cautious strategies, were being replaced by a new breed of executives who were willing to take bold risks. In their place emerged a culture that celebrated risk-taking and individual ambition. This shift was emblematic of the broader changes sweeping through Wall Street, where the pursuit of profit often overshadowed prudence. This new era saw Lehman Brothers playing a key role in the rise of junk bonds. These high-yield bonds were attractive to investors seeking higher returns despite their inherent risks. These high-yield, high-risk securities offered lucrative returns but carried significant potential for default. The allure of these bonds was their promise of high returns, but they were a double-edged sword. Lehman's willingness to underwrite these bonds, often for companies with questionable creditworthiness, generated enormous profits, but also sowed the seeds of future troubles. The short-term gains were undeniable, but the long-term risks were mounting. The firm's aggressive expansion continued into the 1990s and early 2000s. They were relentless in their pursuit of growth, constantly seeking new markets and opportunities. They rode the wave of the dot-com boom, investing heavily in technology companies. This period was marked by a frenzy of activity in the tech sector, with IPOs and skyrocketing stock prices. While this period brought substantial gains, it also exposed Lehman Brothers to the volatility of the tech sector. The rapid rise and fall of tech stocks created a roller coaster of fortunes for investors. When the dot-com bubble burst in the early 2000s, Lehman, like many others, felt the sting of the market correction. The crash wiped out billions in market value, and many companies went bankrupt. However, they quickly pivoted, setting their sights on a new and seemingly lucrative market: subprime mortgages. This market promised high returns, but it was fraught with risks that would later become all too apparent. A house of cards, Lehman's gamble on the housing boom. This metaphor perfectly encapsulates the precarious nature of their strategy, which was built on a foundation that could easily crumble. The early 2000s witnessed a surge in the US housing market. Housing prices were skyrocketing, and it seemed like the perfect time to invest in real estate. The American dream of owning a home was becoming a reality for many. Low interest rates and relaxed lending standards made homeownership more accessible than ever before. Banks were eager to lend, and people were just as eager to borrow. The barriers to entry were lowered, and the market was flooded with new buyers. This led to a surge in demand, driving up home prices at an unsustainable pace. The market was overheating, but few seemed to notice or care. Everyone was caught up in the frenzy, believing that prices would continue to rise indefinitely. Lehman Brothers, eager to capitalize on this boom, dove headfirst into the world of mortgage-backed securities. They saw an opportunity to make enormous profits and were willing to take significant risks to achieve them. These complex financial instruments bundled together thousands of individual mortgages and sold them to investors as bonds. The idea was to spread the risk. but in reality it concentrated it in ways that few understood. They were seen as relatively safe investments as long as homeowners continued making their mortgage payments. The assumption was that the housing market would keep growing and defaults would be minimal. However, what made these securities particularly appealing to Lehman was the subprime mortgage. These were loans given to borrowers who were considered high risk, but they offered higher returns. Subprime mortgages were loans given to borrowers with poor credit histories and low credit scores. These borrowers were often already struggling financially, making them more likely to default. They carried higher interest rates and were considered riskier than traditional mortgages. The higher the risk, the higher the potential reward, and Lehman was willing to take that gamble. But to Lehman Brothers, they represented an opportunity for immense profits. The potential returns were too tempting to resist, and they plunged deeper into the subprime market. They packaged these subprime mortgages into mortgage-backed securities, betting that the housing boom would continue indefinitely. It was a high-stakes game, and Lehman was all in. As the housing market soared, so did Lehman's profits. Their stock prices climbed, and the company seemed unstoppable. Investors were thrilled, and the future looked bright. They became one of the largest underwriters of mortgage-backed securities, raking in billions of dollars. The profits were staggering, and Lehman was riding high on the wave of the housing boom. However, this success masked a dangerous truth. The foundation of this prosperity was built on a mountain of risky debt. The very instruments that were generating such enormous profits were also incredibly unstable. Many of the homeowners who had taken out subprime mortgages were already struggling to make their payments. As interest rates began to rise, the situation worsened and defaults started to increase. The warning signs were flashing, but Lehman Brothers, blinded by greed and a culture of invincibility, chose to ignore them. Analysts and experts raised concerns, but they were dismissed or downplayed. The focus was on short-term gains, not long-term stability. As the cracks in the foundation began to show, some within the financial community started to predict a crash. Investors grew nervous, and the once celebrated executives at Lehman found themselves in increasingly tense meetings trying to reassure stakeholders. When the housing market finally crashed, the impact was devastating. Foreclosures skyrocketed and countless people lost their homes. The dream had turned into a nightmare, and the ripple effects were felt across the entire economy. Lehman Brothers, once a titan of Wall Street, was brought to its knees. The company that had bet so heavily on the housing boom found itself at the center of the financial crisis. Traders left, the building emptied, and headlines screamed of the collapse. The fallout led to government bailouts and sweeping financial reforms. People took to the streets in protest, demanding accountability and change. The era of reckless speculation had come to a dramatic and painful end. In the aftermath, the financial world was forced to reflect on the lessons learned. Analysts and experts debated how to prevent such a disaster from happening again. Slowly, the focus shifted to rebuilding and creating a more stable and responsible financial system. Thanks for joining me on this historical journey. If you enjoyed this trip back in time, don't forget to like, share, and subscribe for more fascinating history bites. Until next time, keep exploring.